Hello traders, welcome to MJP guys, and in this videos I'll be showing you how to use zone and market structure, especially how to utilize advanced market structure and zones, especially on zone, on gold and most of the currency pairs guys. So now this strategy I'm going to show is applicable to gold and all currency pairs. Recently I've shown you guys on how to use the advanced market structure. So I'm going to show you also how to utilize the market structure and how to utilize some of the zones. Now, as you can see, now I'm on gold, and we have been working. If you have been consistent on this channel, you know that we have been working back to back on gold. In fact, this is one of the best currency pair that I like trading when it comes to the financial market, guys, which is gold, guys. And now you can see now we have been going back to back throughout this week. And we are still going, we are still holding, we are still going, guys. So now this is the same concept that we're still using. Now if you see now, this is 1:6, and this I'm anticipating 1:3. So now this is what we have been going back to back. So now I'm going to show you there are two things. Even though this is a series, I'll be showing you how to use one, the price action strategy and the ICT strategy. So but I'm going to start with the ICT strategy. I'll be showing you how to trade using the institutional trading concept, that is ICT. Then later on, as time goes on, I will show you how to use also the price action strategy, the trader strategy. So that is it for that, guys. That is it for guys. That if you are new on this channel, don't forget to smash on the subscribe button and also to smash on the alarm button, guys. Welcome to MJ Peeps. Now let's go to the deal, guys. Okay, let me go on a fresh chart because I've been working massively on my chart, especially when it comes to gold. So let me take you to a fresh chart. Let me take you to. So now this strategy that I'm going to show is applicable to both gold and all instrument, guys. And it's applicable to gold and all instruments. So now let me use this so I will show you. So that is it for that, guys. Okay. As we said earlier, I told you what the advanced market structure is. I told you that the best thing that it has been said earlier that the trend is always your friend. So the first thing that you need to know if you are trading whatever instrument that you are trading is that the trend is always your friend. The trend is always your friend, as the saying goes. If you go against the trend will go against you. So the trend is always your friend. It's something that you always have to work on with. So I told you earlier that you have to stick to the trend and you have to work with the trend. So now based on this, once you have, I will just assume that you have known what market structure is all about. Putting on a fresh chart. Now I told you earlier that you have to know what your market structure is. Once you grab what the market structure is, then that's when the concept of zone comes to play. So I told you earlier that there are just three concepts or two concepts that you have to know concerning market structure. One is a break of market structure. Now let me see, a break of structure. This guy here. One is a break of structure. We say that this zone now is a break of structure zone, and two is a shift of market structure. Well, let me assume that we are going bullish, then price mitigated and we experience a shift. This zone here is a shift of structure, because here we are expecting price to form another higher high. So it failed to form another higher high and it formed lower high. So on this aspect now, I'm going to be showing you how to trade using the institutional trading concept. And for you to trade using the institutional trading method, there are some things I want you to understand. And one of the things I want you to understand is that you have to know the zones. There are 7 institutional reference points. So I'll be taking this institutional reference point one by one. So you take this institutional reference point as zone also. So we'll be taking these zones one by one. So I'll start by one, showing you how to trade using the reference point or the zone, then how you are going to enter. I told you earlier there are four concepts that you have to know when it comes to technical analysis. I told you the first one is you have to know what a structure is. First, if you are trading, you have to know structure. I told you have to know structure if you are trading. As long as you are trading, the first thing I need to know is that you have to know what the structure is. Once you get your structure, then secondly you have to know the zones or key levels. Zones, or we say key level. You have to know key levels, zones or key levels. Number three is that you have to know your entry point. I told you guys this area, you have to know your entry point. Number four, you have to know the confirmation. You have to have some set of confirmation. You have to know this. So now these are the things that I told you guys, that as long as you are trading, especially the technical analysis, you have to know this. So we have worked on what market structure is and also the advanced structure. So maybe if you don't know this, you can just, the video is there, you'll see it there, just go on the playlist, you'll see. So now what we are going to work on is zones or key levels, and I told you guys there is zone or key level based on the retailer's concept and also the institutional concept also. So I'm taking you guys this on the institutional concept, then I will show you how to see straight entry point and confirmation based on the institutional concept also. So that is it for that, guys. The first zone that I want you to understand now is called an order block. It's called an order block. Order block. This is the first zone that I want you to understand. Order block. This is the first zone that I'll be showing you what an order block is, and so I'll be showing you what an order block is, types of order block, and also how to trade using the order block, guys. So the first zone that I'll be showing you, just as I've said earlier, is what an order block is and how to use order block. So this is the basic thing that you'll be expecting in this video, is what an order block is and types of order block and how you are going to trade using the order block. So now the first thing that you want you to understand is what an order block is. Now when we say an order block can be treated as an institutional zone. In fact, it's one of the institutional reference point, and there are two types of an order block. There is a bullish order block and there is the bearish order block. Order block is agreed to be one of the basic place where liquidity resides. So it has been proven to be one of the basic zone that especially the institutions take as place where liquidity resides. So now this is what an order block is. Now I told you earlier, there is a bullish order block and there is the bearish order block, based on the market structure also. So now let's say that for example we are going on the bullish structure. Let's go on let's assume that we are going on the bullish structure. So now how can you use the order block? I told you first there is a bullish order block and the bearish order block. So now the bullish and the bearish order block is based on the market structure they are trading. So I said let's assume that we are going bullish. So the first thing that I want to do, if you want to identify an order block, is that the first thing you have to know the structure. So you have to know the structure. if you want to trade, this is the key point in trading order block. First, you have to know the structure. You have to identify the structure. You have to identify the structure. Sorry, let me fix this. You have to identify the structure. Okay, you have to identify the structure. Secondary, once you have identified the structure, what you need to do next is you have to identify the break of structure zone. So the break of structure zone, you have to know the break of structure zone. As we have said earlier, the break of structure zone. Then the third thing, you have to identify the order block. The order block. So now these are the basic tips that you need to know if you are trading an order block. So now let's follow the tips so that I'll show you how these tips work. So I said first thing, you have to identify the structure. We said let's assume that what we are trading is on bullish trend. Now this is a bullish trend. We say secondly, what you need to do, the break of structural zone. Now this is the break of structural zone. I'll say this is where we'll see the break of structure. So what you need to do, once you identify the break of structure, the next thing that you need to do is you will just go to since this is bullish, this is higher high, you go to where there is higher low. That is this part. Once you identify the break of structural zone, this guy here, what you need to do is just go to the higher low. This is our higher low. Since we are going bearish and we are going bullish, I mean to say this guy here. So once you identify this zone here, over here, then you go to the next one, the order block. Now what is our order block? Now our order block here is, this is where you get your order block. This zone here, this is where you get your order block. So the order block here is the last, if you are going on bullish structure, now the last bearish candle at our higher high is our order block. Remember I said if you are going bullish, if you are using bullish market structure, so once you identify the structure, get the place of your break of structure, this guy here. So you look for the higher high here and higher low, I mean to say here. So at this point of higher low, you look for the last bearish candle or the last sell candle at this point. That is your order block. So now let me get rid of this again so that you understand what I mean. Let me explain this again so that you get what I mean. Now let's still assume that this is our bullish structure. What we know is that there is higher high, there is higher low, you see another higher high. So once you identify this, you know your structure. We said that this is your higher high, you identify your break of structure, then you go to the higher low, the previous higher low, this higher low here, the last bearish candle or the last sell candle or the last red candle at this zone. You have to identify it. The last sell candle or the red candle here is called your order block. So I'll be taking order block now as OB. I'll be taking order block now as OB. So just know that whenever you see OB, and what I mean there is order block. So here is you identify the last here, the last order block, the last sell candle or the last red candle that is in bullish market structure, the last sell candle at this particular zone is called our higher our bullish order block. This is the order block here. This is our order block in the bullish structure. This is our order block. The last sell candle at the higher low is called our order block in the bullish market structure. So now the same thing also when it comes to the bearish market structure. So we have lower low, lower low, lower high, lower low. So once you identify a structure that is bearish, this is the zone of your break of structure. You know that this is where break of structure occurs. So you come to this guy here, the lower low, where the lower low is. Now at this point, the last buy candle, the last buy candle here is called your order block in the bearish scenario or in the bearish market structure. Remember here we said the last sell candle, here is our order block also. Here is our order block also. So here is the last sell candle. That's if it's bullish market structure, the last sell candle at this point is your order block, and at this point also the last buy candle at this point is your market structure. So let me show you this on the chart. Let me show you this on the chart so that you understand what I mean. Let me show you this on the chart. Let me show you this on the chart. Let me show you what I mean on the chart. I told you earlier the first thing that you need to do is to what? Is to identify the structure. Now you see, let me use this. You see here is we are going bullish. So now since we know that our structure is bullish, then what do you do now again is that you identify the zone of your break of market structure. This went up, this went down, and this went up. This is where the break of structure occurred. This guy here, this zone here, you see this is structure. It went up, it went down, it went up. So this zone is a zone of run. So once you identify this, now what you need to do now is that you need from this break, since you know that there's a break of structure here, so what, in fact our target is not the break of structure, our target is the higher low at this point. So we said that the last sell candle, the last sell candle, now this is the last sell candle at this point. This is our order block, this is our order block. You see it here, the last sell candle. Here is our order block here. This guy here is our order block. Now let me look for where there is bearish structure also. Bearish structure. You see it here, what I said now in the bullish, you see the last sell candle is our order block. So let me look for bearish market structure. Now here has been going bearish. Okay, now this guy here is, because here we saw it when market went down, went up, went down, we saw higher high, higher low, higher high, higher low. So here a violation here. After this here we saw a shift of market structure. This guy here, we saw a shift of structure here. So this shift of structure confirmed that the bullish movement was over. So since we saw this shift of market structure, what do? We allow price to went down again. You see it here, price came back here, confirmation of the shift of market structure. So what do we do next? Since you know that we are going bearish, this point we are going bearish, look at it here, we know that we are going bearish. So we look for the last bullish candle, the last bullish candle. Look at it here, the last bullish candle, the last green candle at this particular zone, the last green candle. This is our order block. This candle now is our order block. This candle is our order block. This guy here is our order block. This is our order block here. So in the when it's bearish, you look for the last bullish or the buy candle is our order block. Then when you are going bullish, the last sell candle is our order block. So now, since you have known what an order block is, now how do you treat using an order block. Now let me show you how you trade using an order block. So how you are going to trade using an order block is very simple. How you are going to trade using an order block is very simple. Now let's assume we are still going buy, we are still going bullish. This is what we are expecting. I told you, once you identify your structure, the next thing that you need to do is that you have to identify the break of structure. Do you know that it has, the break of structure has been confirmed? Since you know that it has been confirmed, then you go to the higher high, higher low. I mean, here you look for the last sell candle, the last red candle here. Since it's bullish, you have to identify the last sell candle. So what you need to do is that you will be expecting price to return to the zone here. You are not going to take your trade if it's here. You are not taking your trade here. You are only allowed to take your trade if price return back to the zone of the order block, if possible 50% of the order block. So this is where you are going to take your trade. So what you need to do, you put your buy function or buy tools. Your target is here. You are targeting the previous high. Then your stop loss is beneath under the order block. So you can target 1:2 or 1:3. In fact, price even gave us here almost 1:4 here. So now this is how you are going to trade the order block. I said it's very simple. First, identify the structure. We know that the structure is bullish. Since you know the market structure is bullish, you check it, wait for a break of structure. You see the break of structure has been confirmed here. This break of structure has been confirmed. Since it has been confirmed, what do? You come to this higher low. You identify your last sell candle at this zone, the last sell candle. You itemize using the vertical tools here. Just you have to identify it so that you see it clearly. You use this guy here, these tools. You use this tool to identify it. Then you allow price to go up and come back to the zone. Once price is at the zone, especially 50% of the zone, that is when you take your trade. So you take your trade at this particular point. Now you put this your buy tools. Your target is you can target 1:2 or you target the peak, the last higher high zone. Then your stop loss is at least on a little bit under the order block, so that in case if there is any manipulation, you'll not be victim of it. So you'll not make your stop loss tight like this. Sometimes you can be victim of manipulation, so it will be under a little bit under the order block. So now this is how you take your trade using an order block. Then let me say in the bullish scenario, remember what I said. First, identify the structure to be bullish. Once you identify the structure to be bullish, wait for a break of market structure. You see here has been broken. Once you see this break of structure, you go, the next thing that you need to do is that you go to the higher low, check the last bearish candle or the last sell candle or the last red candle at this zone. You identify it. Once you identify, you can use these tools to mark it out. Once you mark it out, you allow price to go up. Then once price come back to the order block, at least if possible 30 to 50% of the order block, that's when you're going to take your trade. How do you take your trade? Your target is the last high, then your stop loss is a little bit under the order block. So let me show you this on the chart. Let me show you this in the chart so that you see it. I think you see what we said here. It has even happened here. We said identify the structure. Here is the bullish. You wait for a break of structure. You see it went up, down, came back up. Here has been broken. Once we have seen this, then you go to the last bearish candle. Now this is this red candle. That's the last bearish or sell candle. You identify it. You see it. I've identified the last sell candle. Then what do? You allow price to go up and price to even come back. You see price went up, price came back to the zone, at least almost more than 30% of the zone. So now this is how you take your trade. You put on your trade. You are going in, your stop loss a little bit under. You can target 1:2. You see it 1:2 or 1:3, or we can even target this zone. You see it, price still took the zone. You see what price did, price took the zone. So you can target 1:2 or 1:3 of your stop loss. You see it, price took this guy easily, guys. He took this, he gave us this easily. So now that's how. Let me look for another scenario again. Let me show you another one. You see here the same thing, price went up bullish. This another trade again. You see another trade, you can still take this trade also. You see it bullish, price came back here. We saw a little bit break of structure, but price didn't take this particular zone. So now this is our last, we say the last bearish candle. See this bearish candle that has happened here. See the last bearish candle. How do you target this zone here? You put on your see price, you see your stop loss under here. You target 1:2. I said don't make your stop loss tight. Now you target this. You see now price gave us this easily also. This another trade also that you will have taken. Then let's go to different let's go to GBP USD. Let's go to different pairs, because I told you not only gold, you can trade all instruments using this strategy, guys. That's one of the best advantage of using this strategy. You can trade all instruments. So the same thing, you can, let's say that in GBP USD, or let's go to Euro USD. Let's go to Euro USD also. Let me get rid of this. Let's go to Euro USD also. So now you see it's still the same strategy, guys. Now what you need to do is simple. Also identify your structure. Once you identify your structure, know your structure. Let me show you where it occurred, also where this strategy happens also. Let me show you where it happens. The bullish order block. Bullish order block. Yeah, you see it, our structure here is bullish. You see it, no argument, here is bullish also. So once you identify your structure, you wait for price to break structure. You see here it has gone up, it came back, it's being confirmed. Then the next thing is that you identify your last sell candle. This is our last sell candle on this guy here. You see it, our last sell candle here. You mark it out. Now price went up, price came back to the zone here. This is where you take your trade. Price went up, you see it, price went up and price came back again. So you put on this under, you target 1:2, or you target this head here. That is it, guys. See it. In fact, price even gave us, wow, price gave us 1:9. You see it, 1:9.8. So our target is simple, 1:2, or we target the last high here. So that is it for that, guys. So now let me show you also the bearish order block, how to trade using bearish scenario. I mean, that is the bullish order block, how to trade bearish market structure. Now you see it, our structure is confirmed to be bearish. I told you identify this break of structure. You see here has been confirmed, it has been broken. Since it has been confirmed, the next thing that you need to do, you come here, you look for your last buy candle or your last green candle, identify it using these two. Then you allow price to come back to this zone. Once you see price around at least 30 to 50% of this zone, that is when you need to enter your trade. That's where you need to enter your trade. You target 1:2. This should be a little bit above the order block. 1:2, or you target this high, this low. I mean to say, you target this low. So let me show you guys this on the chart. Let me show you this in the chart. Let's see which chart is going bearish recently. Let me show you where this is going. I think the DXY, I think is the DXY dollars index is going bearish, has been shorting recently. I think the DXY USD JPY is Let's look for bullish order block. Bullish order block. Let me show you how you use order block in the bearish market structure, guys. Let me see on this. Can I get where there's bearish? Yeah, this, I told you, identify the structure. You see this structure has been confirmed to be bearish. It has been confirmed to be bearish. So what do you do next is, now you see this went up, it came back. It has been confirmed also here to be broken. You see this structure has been broken and it went up. So at this peak you identify the last bullish candle. Look at the last bullish candle here. You see what price did? Price came and touched this. So this is it, guys. This is how you trade an order block. This is how you trade an order block. You see the target I told you earlier. The last low, 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 the last low. Even this is another order block. You see it went up. It's another order block. You see it. This order block was what initiated our move to bearish. This is what caused the shift of market structure that we saw in the market in Euro USD. Yeah, you see. So this is how you trade an order block. I told you to trade an order block, guys, is simple. First thing, what you need to do is identify the structure, be it bullish or be it bearish. Once you identify the structure, the second thing that you need to do is that wait for a break of market structure. Just as we have seen earlier here, see here has been broken, break of structure. You see here has been broken. Once you see this break of structure, the next thing I need to do, you allow price to go up. You see it, yeah, I mean, sorry to say, I say here has been broken. You see it, we know it's bearish. Here has been broken. Let me get rid of this. Here has been broken. You see price went, you see it here, from here it went up again, came here. Here has been broken. You identify your last buy candle. Since this is bearish structure, you allow your last buy candle. This is the buy candle, this green candle here. You identify it with these tools. Then you allow price to go down again to come. Once you see price touch the candle, this when you take your trade. You take your trade. Your stop loss is a little bit above the order block. Then you target 1:2 of your stop. You can target 1:2 is okay, but if you have large appetite, you can go to the low, the last low. So that is it for that, guys. That is it for that. Don't forget, if you're new on this, don't forget to smash on the alarm button and also the subscribe button. And let me see your comment, guys. What do you think about an order block? Let me hear your opinion. What do you think about an order block? Or which pair do you think responds seriously with an order block, guys? Let me see. Drop your comment. This is MJ Pips, guys. Thanks, guys. Thanks for working with us, guys.